Welcome to Crescat's live market call featuring our macro and activist mining research. I'm Kevin Smith, Crescat's founder and chief investment officer. Before we get started, please refer to our important disclosures pages on the screen now. These can also be found in the description on Crescat's YouTube channel and on our website. Crescat's live market call is about sharing timely macro and newsworthy geologic updates, both the positive and the negative news, across our holdings as they arise. These videos represent the opinions of Crescat as a mining and exploration industry advocate. Our objective is to share the overall geologic progress of our activist strategy in creating new economic metal deposits in viable mining jurisdictions around the world. The securities discussed herein do not represent an entire portfolio and in the aggregate may only represent a small percentage of a strategy's holdings. The issuers discussed may or may not be held in Crescat's client portfolios at any given time and may not be appropriate for all investors. This video is not intended to be, nor should it be construed as an offer to sell or a solicitation of an offer to buy any security, services of Crescat, or its funds. If you enjoy our videos, please click on the like button and make sure you're subscribed to our YouTube channel to get notified of upcoming episodes. You can also follow Crescat Capital on Twitter or X for ongoing macro research and important news updates on our activist metals positions. If you want to learn more about our investment strategies, we encourage you to reach out to Merrick. His contact information is on the screen now and can also be found on our website at crescat.net. So you got all three of us today, and let's just launch into it. Let's get started. It's the usual format. I'm going first with some macro stuff today, and then Tavi will give his usual macro presentation, and then Quentin will do the traditional updates on our activist metals portfolio. He may even have some other surprises for you, but let's get going. So there was a paper. It was published a couple years ago now, almost, but it was by the IMF, and it was titled, this is a working paper, by the way, still, and it's titled Gold as International Reserves, a Barbarous Relic No More, ? Well, the question mark is answered really within the paper, which is, clearly saying that, well, let's just go on to the next and show a couple charts from the paper. So you might have to expand your screen to see this more closely, but what's going on here is that that global central banks really, since back in 2008, what was that, the global financial crisis and the extraordinary measures that were taken by the U.S. government and the Fed to bail out the global financial system, which included, quantitative easing and other programs. But since the global financial crisis, central banks have been consistently and persistently increasing their gold reserves, and this is that's what's shown on the left-hand chart. This data, is only current at the IMF up through the end of 2022 right now. Although there are other sources out there where it's pretty clear that this trend has been continuing, especially with some of the official reports put out by China and other central banks that are still accumulating gold. And you can see on the chart to the right that the number of different countries that have been purchasing monetary gold has also been increasing steadily. So the question is, is this a trend that is going to continue? And really, what's going on with the U.S. and a lot of its NATO and Bretton Woods, traditional Bretton Woods allies that are part of this global dollar reserve currency trading and trade system, and the traditionally under the original Bretton Woods agreement, right after World War I, that's the agreement where the world leaders and allies of the U.S., and including some of our defeated some of the defeated countries in World War II got together to form a new global reserve currency system based around the dollar and with gold as the reserve asset. Um, but so the question is, what's the status of this Bretton Woods system today? In 1971, of course, um, Nixon took us off the gold standard, so gold convertibility was removed, and not unlike what FDR did in 1933 when we were also on a gold standard, the U.S. But he revalued gold from $20 and 67 cents up to $35 an ounce in terms of gold's convertibility to the dollar. But it was a unilateral presidential move, both in 1933 by Nixon and in 1933 by FDR and in 1971 by Nixon. What these, both of these measures, had the effect of revaluing gold upward substantially higher. Gold that was still, in the in the reserves of the central banking system of the U.S. and its allies and its Bretton Woods trading partners. So even after 1971, when Nixon took us off the gold convertibility standard, the gold, of course, went parabolic to the upside, but the U.S. still held on to its gold reserves. Keep that in mind, and it was a means of revaluing those reserves upward, substantially without having to give up the gold to our trading partners who might want to have converted their dollars to gold at that time. But you'll see, where I'm getting at with this. Let's keep going. So today, what are the world official central bank holdings of gold? Because gold is still a reserve asset. That IMF paper that I showed you at the beginning is questioning, is gold still a reserve asset? Because in 1971, gold was still a reserve asset after Nixon took it off the gold standard. But that was the new Bretton Woods system. And the new Bretton Woods system meant that the dollar was still the global reserve currency for trading and settlement purposes, but it was no longer convertible to gold. But gold was still the central bank reserve asset, backing up the credibility of the dollar as the global reserve currency. And of course, the revaluation of that, even though it created a lot of inflation in the 1970s, or it was at least attributable to some of that inflation and devaluation of the dollar, certainly, it was still the reserve asset, still underpinning the strength and credibility of the dollar and the U.S. Treasuries. But it seems like, in more recent decades, that it's almost like we've forgotten that gold, that central banks still own gold and that it is still a reserve asset, as if the IMF has even had to question that. It's kind of interesting. But the U.S. has more gold than any other sovereign nation at 8,100 tons. It's about 260 plus million ounces of gold, and as a portion of its foreign reserves, as it shows here, it's 67% of the U.S.'s FX reserves. Relative to GDP, it's about 2.3% of U.S. GDP. But who else? What other central banks own a lot of gold? And look at Europe right up there at the top. Germany, the IMF, Italy, France. Also has a substantial portion of gold still in its reserves. And those European countries like Germany, Italy, France, and the Netherlands, and so forth on down further, that they have not. It's not like they've given their gold over to the European Union. No, they still maintain that gold in their own country's central banks. And And when you compare it to China has 2,000 tons of gold. And relative to its GDP, it's closer to 1% of GDP. So the U.S. has about 2.3% of GDP in gold, and China about 1%. But when you combine the U.S. with its NATO allies, its European NATO allies, combined in that that kind of Bretton Woods block of countries, there's actually about 3% gold to GDP, about 3% gold to GDP. I mean, Europe, after hundreds of years of really being the dominant, military powers and trading countries, has accumulated a lot of gold over the last 500 years or so. And you think back to what's the common denominator of the global reserve currency, and historically it's been who is the strongest military power. And so it goes back to Portugal, and then over to the Netherlands, over to France, to the UK, and then to the US more recently since World War II. And so there's it's no coincidence that the traditionally, at least over the last 500 or 600 years, the dominant military power in the world has also had the privilege of being the world reserve currency. Also the privilege of being able to accumulate a lot of gold. Anyway, let's keep going here. So when we look at the incoming Treasury Secretary Scott Bessent, I cannot emphasize to our clients, at least, and our prospective clients, how important it is to really pay attention to the messaging that Scott Bessent has been delivering now for the past 6 months or so in his public interviews and in his articles. This is referencing an article. You can see the link below that he wrote for The Economist back near the end of October, about 2 months ago. And really important to pay attention to a lot of the messaging that he has been giving. I mean, I consider him a whisperer for what is to come with the incoming Trump administration. The reason that Trump appointed him becomes very clear when you read his articles, when you listen to his public interviews. And for anyone who wants me to send them some links to these public interviews, I encourage you to reach out to me or to Merrick, and we can get those for you, because there's 3 really good ones in particular that I'll reference, and one was an interview the day before the presidential election with I forget the name of the guy who was interviewing him now, but really important to hear him and what he's talking about there in terms of the new Bretton Woods realignment that he sees as imperative to the Trump administration's economic and geopolitical plan, the new Bretton Woods realignment. There's another place where I think it was a Bloomberg article or interview, where he also gives it another name. He calls it the Mar-a-Lago Accord. So the new Bretton Woods realignment plan, the Mar-a-Lago Accord, really something to tune into when he's talking about these things. And what does it point to? Well, he makes clear in that interview the day before the election, he runs before coming to the Treasury Secretary, and his main business that he's been in for the last several decades is he runs a global macro hedge fund. He used to be the chief investment officer at Soros Investment Management. and he has recently had his own macro hedge fund called Key Square, and he makes it clear in that interview the day before the election that his largest position in his global macro fund is gold. So when he talks about things like a new Bretton Woods realignment and his largest position in his macro hedge fund being gold, you know, listen to his other interviews and try to piece together what he's really saying here. It's I think it's along the same lines as that IMF paper, and I think he's pointing to that the U.S. Should have a plan to not only for a new Bretton Woods system, perhaps a Mar-a-Lago Accord with its trading partners and its NATO allies, but maybe gold should be at the center of that system once again. Something we've totally gotten away from in the last few decades, I've always said that the idea that a central bank can print money and buy gold is kind of like a prisoner's dilemma. And once a number of countries start doing this, what's to prevent everyone from cheating? Once someone starts to cheat, then everyone has to cheat, and in game theory, that's the prisoner's dilemma is basically that idea that the system can only hold together if nobody cheats, if you don't rat on your cellmate, in other words. Anyway, the point is that the U.S. is I think is going to be getting back into the game, into making gold a central part of its own, of the backing of treasuries, of the backing of the U.S. dollar. I'm not saying that we're going back to a gold standard, but piece together what Bessent has been talking about, and I think you'll see that that this new Bretton Woods realignment, can have gold at the center of this currency and trading system. Let's keep going. Let's go on to the next. So right now, a lot of people will say, well, geez, does the U.S. even have the gold anymore at Fort Knox? And we talked about all the Europeans with all of their gold under the old Bretton Woods system. Where is all that gold? Well, a lot of the gold is actually still at the New York Fed. It's in the vaults of the New York Fed. While Germany has repatriated some of its gold and France has repatriated all of it. This is from the World Gold Council, and in the paper by the World Bank. 36.8% of Germany's gold is still held at the New York Fed. 43% of Italy's, 31% of the Netherlands, and a lot of it's at the Bank of England. It's in vaults around the world, but it's still there. I mean, this is the Fed still trades gold. The world still trades gold. The bullion banks still trade gold. The question is, to what degree is it really going to be a centerpiece as a reserve asset, for the dollar? And I think Bessent has a plan. Bessent and Trump have a plan to make it more of a centerpiece. Anyway, the fact that the Fed already has custody of a lot of this gold, it's just something that I want to point out on this slide right here. Let's go on to the next. So in this World Bank paper that was published very recently, it's making a point that that gold is an important asset for diversification. Now, not just an important reserve asset for central banks, but they're talking about for investors at large. And they do a study here of gold treasuries and U.S. equities in three different types of inflationary environments: low inflation, moderate inflation, and high inflation. And guess what? Gold does well in all three of these environments historically. You know, Gold can be up 10% in a low inflation environment. Well, it's because gold can act as both a risk on and a risk off in type of investment. And sometimes when you get these more disinflationary or deflationary type financial crises, gold can actually do really well. And the lower performance, but still positive, is in the moderate inflation periods. But what happens when we get into a high inflationary regime? Well, that's when gold can really help help your portfolio perform. Having some gold as part of your asset allocation, can be really important, especially in a high inflation or a stagflationary type economic environment. Let's keep going. Also, they look at business cycles. So again, we're looking at different asset classes: gold versus U.S. aggregate bonds versus U.S. corporate bonds versus U.S. equities versus commodities versus real estate. And we've always said, there is a business cycle, and it feels like we haven't had a business cycle since the global financial crisis, other than that little 2020 COVID blip, which was hardly a recession at all. But we believe there is a business cycle, and look how gold performs at all the various stages of the business cycle based on this World Bank report: early cycle, mid cycle, late cycle, recession. Gold is up in all of these cases. Of course, what are the times when some assets go down? It's recession, and you can see, I don't know how they measure the length of all these different time periods, but they're obviously looking at a lot of different time periods to aggregate this data. You can see down there in the footnote is from 1990 to 2022. There's a few recessions in there. Anyway, let's go on to the next. If that's all I had, I really want to let me just conclude before we get to Tavi that like I said, if you want to learn more about what our intuition around what we believe this grander Mar-a-Lago Accord or New Bretton Woods alignment plan is, I encourage you to listen to those interview links that we can share with you. Listen to Scott Bessent himself. A lot of the media is interpreting a few aspects of this much bigger plan that Bessent and the Trump administration have. Where they're focused on the tariffs, that maybe those are going to be bullish for the dollar rather than bearish for the dollar, but they're not looking at the grand overall plan. And so we've had this sell-off in gold and in gold stocks since the Trump election. I mean, originally, gold was supposed to be a Trump trade, but there's this interpretation among the financial media that it's actually a strong dollar plan based on some of the more overt aspects of the Scott Bessent kind of three arrows plan. I just encourage you to listen to the much more comprehensive picture that he is painting, because he is telegraphing what the real plans are for the Fed. And we think it is, take Scott Bessent at his word when he says that maintaining the dollar as the global reserve currency and a devaluation of the dollar are not mutually exclusive. Tavi's made this point before too. And these things are not incompatible. And I really do believe, as part of the grander plan to get on the right path towards solving the debt and the deficit problem that we have in this country, that there is a plan to devalue the dollar that comes along with it. And I think it means devaluing the dollar relative to gold as well. So that's it for me. I'm going to turn it over to Tavi now.
All right, thanks, Kevin. So yeah, just to start my presentation, I was going to say that I agree with a lot of these views on the dollar. Interestingly, I think I came from a different perspective on this with the same conclusion, or similar conclusion at least, regarding this. In my view, I just believe the dollar has been suffocating the rest of the world in a big way, and it seems to me that we're likely to see a peak of the dollar relative to other currencies. Specifically, I think we've seen that on spades when it comes to hard assets, but that is also likely to happen with other fiat currencies, and that's, in my view, what unleashes a lot of important trends in the macro setting. Like, emerging markets have been for a long time neglected. The mining industry, I mean, if you think the mining industry has not received any capital and has been starved for capital, this is not unique for them. You can look at Brazilian equities and Peruvian equities and others. And I think it's important to pay attention to some of these trends that have started already to work on capital diverting from, or at least leaving the US and going to other parts of the global economy, like the Japanese stock market. We've seen the Nikkei finally taking out their highs from the early 90s and late 80s, when we had this, one of the largest speculative bubbles in history of the real estate market and other assets in Japan. Finally, we've taken out in dollar terms those highs. We're seeing India starting to perform well for the last few years. We've seen Argentina starting to perform well. To me, it's just a matter of time until these things start spreading to the mining industry, other parts of the mining industry outside of the seniors, Brazilian equities, Mexican equities, you name it. I mean, all these things look very interesting. Now, I'm going to make a point here, especially in the following slides, that I think in line with this, which is a little bit outside of the emerging market space, but also talking a little bit about the developed world. What I think there's narratives in the markets that sometimes are not necessarily justified, and some of them, and this actually happens quite often in the macro environment, and this is a good example of them. If you look at this chart, for instance, we're looking at the S&P 500. The white line is going back to the early 2023, so January 3rd of 2023. Why did I pick that? Well, it's the beginning of a year that essentially in April, or about April, I believe, or March, we had the release of the ChatGPT, which unleashed the beginning of the sort of AI craze, if you recall. And you can see that the price of equity markets went nuts after that, right? And it's up about, again, this is normalized at 100, so subtract 100 from the number you see on the screen. So that is an appreciation of about 53% on prices. But when you look at the fundamentals, and that is the blue line, which is looking at aggregate earnings, you can see that we've experienced quite marginal corporate earnings growth, about 6.5% of earnings growth. So most of this inflation, or the inflating side of the multiple, happened on the price side, which is significant when you think about the degree of the speculative era we're in right now. If we go to the next chart and you do the same with other countries or other regions of the world, what is interesting about that is other parts like Europe. And let me tell you a fact that is, I would say very much off the radar, is that Europe and China, or Europe in general. So I'm looking at two indices. For China, I'm looking at MSCI China Index, and for the European equities, it's sort of their version of the S&P 500, so the stocks Europe 600. And what you see there is a growth in US dollar terms, because that's the right way to measure, of about 8% on corporate earnings since the same time that I said, since the beginning of 2023. Those companies, when you look at, in China was about 17%. And now you look at the stock performance on the right side of this chart, and you can see, the U.S. at about 58% growth, and the other two at a much lower amount of appreciation. This is clear to me that, in my view at least, I believe that the dollar is at its last gasp that we're seeing. A lot of that has to do with what the 2016 post-elections period and the repricing of macro assets happened during that time, when the dollar actually rallied after Trump got elected until actually his inauguration. And that was what marked the very top of the dollar at that time. And then we saw a 13% decline in 2017. And then actually we saw a rally in the dollar, and then another decline coming into the COVID recession period as well. So what I think it's likely to happen is that, number one, fundamentally, these companies are beating the U.S., which is really interesting. This is, again, completely off the radar. Most people like to say that the U.S. exceptionalism will likely start when Trump gets elected or becomes the president. And I am of the view that we've been through that exceptionalism since the global financial crisis. In fact, I believe we're more towards the end of that exceptionalism from a corporate earnings standpoint. That's what I'm referring to. Let's go to the next chart. Now, funny enough, if you play the same calculation, do exactly the same analysis with the gold miners since 2023, just to use the same metric, you can see the corporate earnings outpace the share price improvement over this time. And so, yes, the share price has been actually increased by about 10% since early 2023. And you can look at the corporate earnings growth, which is closer to 61%. That is, just another thing to think about. That is about 10 times of the growth that we saw here in the U.S. overall earnings for corporations in the S&P 500. So look at aggregate earnings, and I'm looking at earnings per share, which I also think is the right measurement, looking at dilution as well as part of the calculation. And you can see that, the earnings growth in the U.S. was about 6.5%. So 61% from the mining space has been, very significant. I also find it interesting because, as I said before, I think the Wall Street Journal put out a remarkable, and I think will really mark the bottom for gold during September of 2022, a little bit before this chart starts, and of which they said that gold has lost its reserve currency status or reserve status. And what I find interesting about that title was that since then, gold prices have gone up about $1,000 an ounce. And I believe strongly across the board that we have not seen, with some exceptions, the cost of mining to go up to the same degree. And so that is why the blue line has been moving up substantially. Particularly, you can see this jump recently that a lot of people have not paid attention to, which also coincided with a big decline in this index in the white line, since we saw that jump recently on the recent earnings of most of the miners. So fundamentally, mining companies are doing better, and this is an important aspect, at least of our thesis as well. Let's go to the next chart. In the next chart, you're looking at the S&P 500 as well, and a calculation that I think it's an important one, and it was really created by Robert Shiller, the professor, and he's with the Yale University. They calculate the CAPE ratio, and they also calculate the CAPE yield, of which is just taking the CAPE ratio, the cyclically adjusted PE ratio, and you do 1 divided by that number, and that's when you get the yield on the CAPE ratio, and that's your essentially your red line. And then in the white line, you can kind of see the subsequent 10-year annualized excess returns of the S&P 500 total return. What you find here is this relationship between these two things historically, clearly, of which when valuations get really extreme, in other words, the red line goes really low, it also coincides with performance actually being very low too. And so, we are at a point where valuations are now at a very extreme. In this calculation, we're above the Great Depression peak, or prior to the Great Depression, the 1929 peak. And at that time was also time when the president of that time would put out tariffs and establish some tariffs across different nations, and that was one of the things that triggered the sell-off of the time, that also popped the bubble of that time. And I find it interesting, this level of confidence that a lot of investors have today, looking backwards because of the performance we've had, and not really thinking about or considering the level of risk that you're taking at buying an asset or overall market at these valuations, which I think it makes it very, very difficult to find long-term returns when you reach these excessive multiples in the overall market. Let's go to the next chart. Now, in the next chart is something I noticed before the recent decline in equity markets, was that the breadth of the S&P 500 has been weakening. What does that mean? Well, some of the members of the S&P 500 have not been reacting to the same positive way as other members of the S&P. Yes, we've seen a big separation of the mega cap companies and the Mag 7 and others versus the rest of the market. The 490 members of the S&P have really substantially lagged those top 10 companies in the S&P today. But most importantly is that this divergence of this the breadth, as you can see on the red line. The red line is just calculating the percentage of members of the S&P 500 that have been there are currently above the 200-day moving average, which is just a technical term of looking at the price and the average of the 200-day moving average of those prices. And what you see here is that the prior time that we saw this red line falling was clearly in 2021, was when you start seeing most of the soldiers not following the generals in a clear way. And that's usually a time when you want to be paying attention to the risk, especially either a vol event or some sort of a correction, a very large correction that could be initiated by the fact that things are very frothy. Now, we can be talking about things like that. When I remember told some of the folks here at Crescat, they were saying, "Wow, we've been talking about this for a while." Yes, and I think structurally things have not changed. I mean, structurally, looking at metrics, the risk has always been there that things were getting very frothy. But I would really point out that technically, I think that the S&P looks very picky in general, and I do think there's a chance of a much larger correction coming into to 2025 as a big risk for the overall market. I mean, it's not always you see things like Fartcoin having a larger market cap than some of the best gold discoveries we've seen in the last 10 years. And it's not, usual to see this level of hubris from a lot of early young investors that I'm seeing across my network with how much money they've made in the last few months or so with their crypto investments. And so, I am, I like to study history. I like to study what has happened in the past and understand the risk of those things playing out again. And in my view, when you start seeing that level of frothiness and confidence in markets, usually it's not the time for you to be, overly positioned in these especially in the S&P 500. So in my view, there will likely be a transition of capital from the S&P to other places. And I do think a correction initially is probably something that would be on top of my mind, at least for the beginning of 2025. Let's go to the next chart. Now, another thing to consider is what's been happening with the 10-year yield. The 10-year yield has been moving drastically higher recently. It's, it is interesting because there was first we saw the movement of the 10-year yield much higher when Trump was, winning the polls, and we're starting to see the risk, well, not the risk of the chances, the probability of Trump actually coming back. And that caused the 10-year yield to surge at that time. And right after the appointment of Scott Bessent, we did see a large decline of yields, and especially in the back end of the curve, of which caused the flattening of the yield curve as well, mostly caused by the back end of the curve falling quite significantly. Now we're starting to see the 10-year yield moving a lot higher once again. And what is interesting is that this is not being caused. I mean, if you look at the 10-year yield relative to, for instance, oil which has a very clear connection. If you look at those two charts together, you will see very easily that they tend to move, in tandem. So it hasn't been really a major change of inflation. There are some signs of inflation moving higher, like agricultural commodities is a classic one. Natural gas prices have been, moving higher over the last few months. But I do think this is more to do with policy related, and potentially what we may see as well in terms of issuances that could be causing the white line to move higher. Now, if you're an investor, adding to your risk profile and adding also to the risk that investors are taking when they're positioning themselves in the S&P 500, it's important to note that when cost of capital goes higher, it also increases your risk. And so you're looking at the red line. The red line is just the valuation of assets. It's a yield calculation, so it's the PE ratio inverted. So the lower the red line, the more expensive equity markets are. And you can see they're both in the same axis. And now we have the S&P 500 earnings yield lower than the risk-free rates. In other words, you can essentially get risk-free with an institution that can print as much money as they would like to in any sort of issue. And, you're getting a better yield than what you get on a yield on a highly, I would say, highly risky instrument like the S&P 500 at these prices. So that's the point. Last time we've seen this two lines cross was right at the tech bubble era as well. And, notice that they were crossing prior as well. But usually you tend to see those problems when the 10-year yield is actually starting to move higher, which is what usually tends to trigger the problem. And then, as you can see early there in the early 2000s, when things got really problematic, that was when the 10-year yield really peaked. And you start seeing the equity market getting cheaper with the red line moving higher in the early 2000s, all the way out to the global financial crisis. All right, let's go to the next chart. So now in the next chart, I'm just showing a technical, and I kept this chart here just because we're not technicians. We're not guys that really follow technicals as closely. We prefer, we give a much higher weight to our macro analysis and fundamental analysis. However, it is important to see when things are starting to get momentum. And the 10-year yield recently hit that line and it rejected, if you see closely, that we did see hit a support, or I should say a resistance. And now the 10-year yield seems to be really breaking out. And how much can we see? Well, look, when Trump got elected back in 2016 or so, we gained about almost 200 basis points on the 10-year yield. Can we see 200 basis points here? Oh, it's definitely possible. I think it's very policy oriented. What we'll likely see from here, but things are quite problematic in that front. I do think that a much bigger and more interesting idea for 2025, rather than the chart you're looking at, is actually the dollar trade. In my opinion, the dollar idea overall is where I'm basing most of my opinions for the year of 2025 and the following years that we may see. Let's go to the next chart. Now, it's interesting when you see this frothiness of markets and the milkshake theory from Brent Johnson, which has been playing out exactly the way he was talking about, with the dollar receiving all these funds and actually going back into the equity markets and pushing equity markets relative to the rest of the world. But things are getting very extreme. And there is a moment when things turn. The dollar milkshake theory cannot go on forever. That is something that basically, as I said, suffocates the rest of the world, because it sucks all the dollars, all the money that is outside of the US into one place. And I view it very difficult as a policy for the Trump administration to, have the US growing, which would require the rest of the world to grow as well, without also, causing, in order to have the rest of the world to grow, you really need to devalue the dollar, in my opinion. Now, this chart is just to show how extreme things have become. U.S. equity markets today have a higher market cap than the entire non-U.S. market. I mean, I don't know. It seems to me that this is the first time potentially in history that we've seen such a large, such an extreme of inflows in equity markets in the U.S. Usually these dollar trends when you have an upward dollar trend, it will either go to treasury markets, corporate bonds, or U.S. equities. This time, it's been really pronounced in U.S. equities, and to a degree that now U.S. equities have a higher market capitalization than the rest of the world. That to me is just kind of mind-boggling, really. I don't see how you justify that the blue line will continue to move higher and the red line will continue to move lower. So let's go to the next chart. And the next chart is one of the examples that I said of inflation. We recently saw agricultural commodities have a run up to its highest level in a decade. You can compare that is about 25% higher than what we saw when prices were rising right before and during the Russian invasion period. Markets were moving way ahead of that Russian invasion. And as you can see today, we're seeing another big move. I am of the view that commodities will continue to be moving in this upward trajectory just because of one thing, that usually bull markets in commodities, which is our view, they happen in a dynamic that is very rotational. And so you tend to see always the flavor of the month. And so what is the flavor of the month? Well, recently has been agricultural commodities, but these things keep rotating into a new one and the new one. And they are not unique. They're also very interconnected. And I believe that we are facing one of those issues that drives inflation much higher, which is an important aspect of how to allocate capital in an inflationary environment, structurally inflationary environment. Let's go to the next chart. On the next chart is one thing that I think is important as well, is the leading indicators that tend to point to a direction where other assets may be going. And I always pay attention to gold because, understanding the gold market is almost fundamentally important to then understand what other assets may follow. And what I learned of looking at historical charts is that the gold trend tends to unleash other trends. Emerging markets is just one of them that a lot of people have lost faith, that continue to be extremely skeptics and lost capital interest to invest in those areas. There's certain areas that look more attractive than others. I think that Latin America, especially South America, are incredibly interesting in my view for many reasons. And I've said it before that I do think South America will play a role into this onshoring and providing the resources we need in the US and other developed economies, given the fact that it's such a resource-rich area of the world. And when you look at the valuations relative to the other parts of the world, look extremely cheap. And so if I'm of the view that this is, if I'm of the view, I don't know for certain, but I'm of the view that this is likely to be approaching the peak of the dollar trend, then I think that the emerging markets, which have been in a consolidation period for a very long time, and seeing gold already leading the way to the upside, it makes me think that we're very close to something that could be potentially very positive for emerging markets as well. And hence why I'm in Brazil. No, I'm kidding. I'm in Brazil for other reasons. But I do think I've always been a skeptic of Brazil. And I do think that this is another important trend that may also play out as part of this emerging markets idea. Let's go to the next chart. I promise I'm almost done. I think this is probably, every now and then I see some really interesting data points, either mine or somebody else, and but whatever. And this one has been kind of caught my attention, in a significant way. If I point out to, a chart that I worked on over the last 12 months or so that I think are one of the most important charts, I would point out to this chart. It's regardless of everything that Kevin said, which makes a ton of sense. And I actually think it's very plausible and it has a very high chance of happening. This, to me, explains a completely different context, comes from a completely different idea, and it gets into the same conclusion, which is that the dollar is likely to devalue. And that doesn't mean the end of the dollar. Some people say, well, are you saying that the dollar is going to lose its reserve currency? No. Look at this chart. I mean, we've seen many major downward trends in the dollar that didn't cause the reserve currency status to go away. That can also be another risk, but I don't think I need to answer that question as an investor today. I think that's an extreme answer to the problem that always has a probability of happening. But I also think that this administration may have a very important role into avoiding that happening. And potentially what we could see is either a coordination across countries, which was exactly what happened in that 1985 in the Plaza Accord, or just, again, the natural forces of the market causing the dollar to devalue in order to see growth elsewhere. In order to see growth in the U.S., you need to see growth outside of the U.S. The U.S. is not an island. And so if everything else is collapsing, which it hasn't been the case, by the way, we just seen the neglection of capital in other parts of the world that have gone sideways. They haven't been collapsing. There hasn't been a divergence of markets outside of China. And so my view is, I think both markets can do well, but really, where is the value proposition to invest outside of the U.S. is much more attractive in my view, especially if the U.S. will continue to do these more growth aggressive policies that can actually drive the rest of the world in a significant way. And so, in my view, most of that capital has created what we call the tech bubble 2.0, where you saw prices going up, but fundamentals are not following the same level of improvement, and that's a classic bubble style, or environment that we tend to see. And so, to me, that's unsustainable. We're starting to see the rollover of the dollar. This is a 10-year rolling change, so you take a 10-year performance, and it's rolling over time. And you can see that we're starting to roll over. And I do think that will unleash a lot of things. It's emerging markets, gold, natural resource, commodities, and all sorts of interesting trends that have not worked over the last 10 years or so. Let's go to the next chart. I think I'm almost done. Last thing I want to talk about is what's been happening with Elon Musk. Elon Musk has been created this Colossus AI supercomputer. This is essentially, he is using 100,000 GPUs to form a supercomputer. To give you some sense, this computer alone within 100,000 GPUs would be sufficient to use the same electricity consumption of 150,000 houses in LA. One computer. He's already talking about taking that to 200,000 in the following weeks. And he's also talking about going to 1 million GPUs into one supercomputer. And guess what? All these other mega cap companies are also looking to do the same. And so we as investors need to think about, first and foremost, what are the trends that are likely to also unfold from this? One of them, in my view, is electricity consumption. And one of them is that, Musk has said multiple times how solar energy is likely to play, or solar panels are likely to play a key role into providing energy to the U.S. economy and other parts of the world. And he's a big proponent of that. And in fact, if you go to the next slide, which I'm almost done, you can see in the next slide that one of the, that we would, this is my own calculation of this, of his assumptions, where he made an assumption where he suggests that we would need 100 mile by 100 mile of a solar farm that could power the entire U.S. And then I looked it up in a few different ways, what is really the amount of silver being used in each of those solar panels. And so we took an average here of 5.6 grams of silver per square meter. And now you can see where I'm going with this. I'm going to calculate how much we're going to use of silver in order to power the entire United States with solar panels. This is one country. There's plenty other countries that will likely follow if this happens. And that you can see clearly, and I'll show the math in a minute, that would take about 5 years of global production of silver alone to make that happen here in the U.S. Let's go to the next chart. So if you can see in the next chart is just the math. I'm not going to go through the entire math, but you can see that the entire thing would take about 5.1 billion ounces of silver. You can either take a screenshot or go to my Twitter. You can also find that math over there. If you find any issues, you can email us, and I'm happy to go over this. I'm looking for the truth, and I've done my best job also working with Kevin and Quentin to calculate this, because I do think this is a critical aspect for silver demand. And look, this is just a separate thing for people that don't know. Silver demand for solar panels is about low double digits. I think last time I checked was about 12%. It's been growing exponentially though. Now, what we were talking about here is a big change. We're talking about, a major change of demand coming from one aspect of silver. Forget about the monetary aspect, which to me is first and foremost the most important thing here. Let's go to the next one. I think I'm almost done. It might be my last one. And that's it. Quentin, you take it from here. Thank you.
That's not your slide, Tavi. That's not my slide.
I was like,
I'm joking. Yeah, no, I was at the mall the other day, and I took this picture because I thought it was very appropriate. It was Santa, and he's talking to this young lad about the values of gold. Okay, and it's refreshing to see because a lot of the younger investors out there are investing in such things as Farcoin and stuff. But Santa got this kid he came around. Now he's seeing that gold's got an intrinsic value, and he's not going to follow in his his older brother's path of investing in Bitcoin. But anyway, look, this has been a dang tough year in the mining space. I'm not going to pretend. I mean, it's just been awful to see junior companies, particularly, get so beat up. And you can look at a number of reasons. You could point to short selling. Yeah, there's short selling out there. There's no question because mining companies need money, and because of that, there's always an intrinsic, or not intrinsic, but in a natural drag on the stock prices just from that. But when you get into a soft cycle like we've seen the past year or two, it's tough. There's other reasons. Look, other investments have attracted money. They basically become more appealing to investors than mining, at least for the time being. Okay, there's a lot of reasons. There's a lot of excuses out there we can throw at why the junior market has performed like it has. I don't have the exact answers, but I can tell you this. This metal stuff is scarce. It's hard to find. We're running out. We're going to be short of supply in a number of metals. Look at the prices of metals. They're actually doing quite well. Gold's up. It's not quite at its all-time high right now, but it's not far away. Yeah, it's pulled back a little bit here, but you know what? Compared to the beginning of the year, we actually have seen appreciation in virtually all metals over the past year to date. So, what message do I have for folks? Well, we're persistent, we're patient, and if you're going to invest in this space, you got to have a degree of that. I can tell you this: there's 8 billion people on this planet, and many of them have left. The kind of the emerging economy. They've moved up the ranks. They're middle class now. They don't want to go back to living in the Stone Age. So because of that, my view is the demand for metals is going to persist, increase, if anything. And because we're not seeing the capital come into the space to build new mines, explore, et cetera, there's going to be shortages. And that means higher prices. Ultimately, it's going to mean good things, I think, for everybody that invests in this particular sector. How everything else pans out, Bitcoin and all the crypto stuff and whatever, that's way out of my league. I'm a geologist, and what I do is I talk about updates for our companies. And this week, I have a lot of updates. I was actually shocked. The last time we did an update or a video was about 2 weeks ago. And I thought, wow, boy, the news is a little skinny. But actually, when I had to go make a slide deck, there's quite a bit to talk about. So let's plow in. Let's go to the next slide. Okay, I introduced Electrum Discovery a few weeks ago. They are a relatively new investment for us. We didn't take a huge stake in the company, but we took a meaningful stake. They are focused on exploring in Serbia, so in Southeast Europe. And you say, Jesus, sounds a little bit, out of the norm. Look, one of the most successful exploration companies in the past decade or so was Reservoir Minerals, which found a very high-grade copper-gold deposit not far from Electrum Discovery. In fact, it's within a few kilometers. And the story that Electrum Discovery has is actually quite similar in my view. Geologically, it looks very, very similar. These guys have a good technical team. They've been doing the hard work to develop their target. And this week they announced some results from some of the data that they've gathered in preparation for drilling. Now, I talked to the company about 3 or 4 days ago after this news release came out, and they actually have laid, I guess it was yesterday. Wow. Kind of a blur. Anyway, they have laid out plans for drilling in early 2025. They have enough money in the bank to do their first pass drill program, which is good. That's what we helped them fund, and we want to see this happen. But this data that they've gathered is really intriguing. Really shows some well-defined targets. I won't read through all the bullets down there, but basically they've done some trenching and geophysics that highlight a very robust target here. This is in their Timok East property. They call it the Bambino anomaly, but it's the Timok East target area. So let's go to the next slide and see what they came up with. Okay, firstly, we're looking at a plan view, a map showing the target area, and the colored patches that you see there are all copper anomalism. It's contour copper values in soils. Okay, and you can see a very well-defined trend. First of all, the northwest trend that goes through this area, and in particular, very high grades of copper in soils right there in the center of the image, and that is where they did their trenching. And my eyesight is absolutely horrendous. Can't read any of the numbers, too darn small. You can go to their news release to read it yourselves, but they did a trench program over that core area, and they came away with a pretty long interval. I think it was over 100 meters and change of like 0.3% copper. And this is at surface, so it's in an oxidized environment. You would expect a bit of depletion of the metal at the surface level in here, but it's a strong anomaly, if anything, that tells us there's a big copper system here. Note the scale. This kind of trend that you see here is about, I think it's around 4 or 5 kilometers in overall length. You have a target there that's about 500 or 600 meters. It's particularly high grade. They did geophysics across there. Let's go to the next slide and talk about that. Here you can see they did resistivity and chargeability. So IP resistivity is what we call it, the technique. That basically measures electrical response of rocks in the ground. And the top is showing us where there is resistive rock in the subsurface. Notice at the bottom there, the bright red colors and yellows and oranges show there's a large body of resistive rock down there, and that's interpreted by the company to be silicification, so potentially associated with the mineral system. And notice how it sits right below the anomalism in the copper in the trench that we saw in the soils and stuff. This looks like a really nice walk-up drill target at this point. It's kind of confirming that the company sees a target, and they notice the drill holes they have planned across there. They're going to test the shallow regime, but they're also going to get down into that higher resistive area. And then down here in the next image, you see chargeability. This is basically a measurement of how much electricity gets soaked up in the rocks, whereas the top bit, the resistivity, is how well electricity transmits through rocks. In the bottom image, you're seeing rocks, in the lighter blues and stuff that are soaking up a bit of charge. And the interpretation here is that is sulfide that's potentially associated with mineralized system. And again, these drill holes do a good job of targeting that. Okay, so we're going to see, I would say, a kind of a confirmatory test of this target with this drilling. Now, this is a relatively shallow drill program. Okay, we'll talk about that more in a second because I think there's more going on here. But it is a good test. Let's go to the next slide. This is simply a 3D rendition, and it gives you a little bit better look. So this is chargeability. So you can see all 3 of the section lines down there at the bottom, and then you can see where they sit with respect to the copper anomalism up there in the top. You can see how there is a very strong coincident chargeable anomaly that's associated with that high copper in the soils. Okay, so again, this looks like a really compelling drill target. The company's going to go in there, drill a few holes, and we're going to get some answers here. Now, I do think that they're up in what we call the high sulfidation part of the system. So they're more up in the tippy top of a larger mineral system. And we'll talk about that in a minute. Go to the next slide. This is our resistivity section. It's a little bit harder to see because the trend goes through there a bit obliquely, but you can see there is a resistive blob that's going underneath the copper anomaly. And again, that's probably associated with something that's driving the system, an intrusion or something down there that's driving the system. All right, go to the next slide. Now, the company used some, we'll call it innovative software to model this thing with respect to how we as geologists interpret typical porphyry style deposits. What is this thing? Well, this is basically a program that takes kind of the picture, the model of a porphyry deposit, okay, a porphyry with an associated high sulfidation deposit sitting above it. And then it adjusted vertically, okay, based on the interpretation of the data that's seen at the surface. Why would we want to know this? Well, we want to know if the porphyry is like right up at surface or the porphyry is a bit deeper, like where are we in the system? And the conclusion here is that these drill holes, this regime, the shallow regime where we're going to see this drilling done, is up in the high sulfidation part of the system. This is be up in the tippy top of the system where all the fluids were moving up and then interacting with surface waters and things like that. You say, well, that's interesting. What does that mean? Well, it means that we could see a similar story maybe evolve like we did with reservoir minerals in their discovery that's not too far away. That means potentially there could be a high-grade copper gold system hiding in this high sulfidation environment in the subsurface environment, like right in the shallow regime. I think that's really intriguing. I think the company gets a bit into the technical weeds when they present this, but that's what they're trying to convey to people here, that, hey, we've got a target that's very, very similar, looks very similar to the target that was seen at reservoir in the early days. What's all that stuff down deeper? Oh, well, that's the porphyry. That's likely where the porphyry is. It's probably a bit over 1 kilometer at depth. Are they going to drill that in this first pass? Probably not. Okay, they're not going to drill holes that deep. I think they're going to test the shallow regime first. If they see good numbers in there, what I was told on the phone call yesterday after this news release came out is they would continue drilling so long as they have budget to do so. In other words, if they see good stuff, obviously you're going to keep drilling a hole as long as you are chasing it down in the ground. So, I think the company is smart. I think they're doing the right thing here. I think we will get a conclusive answer about this target. It's such a simple, well-defined target at this point. This is one of those where we're going to get a good answer. Okay. I think in very few drill holes, we should get a compelling picture one way or another if there is a sizable system. Doesn't mean they'll make the discovery in the first hole. I'd like to guarantee that could be possible every time we drill something, but no, I mean, this might take a few rounds of drilling. Nonetheless, I think we're going to see very early on if these guys have a big system here. Okay. And I'm hopeful they do. I think this is a really, really neat target, and I think it's going to make a great drill story for 2025. All right, go to the next slide. Now, last week, in fact, I did a little interview on Thursday last week after the news came out. Barksdale, which I am director of, came out with visual indications of mineralization encountered in their deep drill hole at the Hermosa area, or Sunnyside project, we'll call it, in Hermosa district in Arizona. Okay, now this project is a very significant project that sits next to a mine that's going to get built by South 32. South 32 has the Taylor deposit, and they have also made a recent discovery of something called the Peak deposit. And they are planning to build a $2.1 billion mine and mill right next to where this drill hole was drilled. Okay, so the meaning of this drill hole is incredibly important. This is basically the first confirmatory test of the down dip continuation of the ore bodies that we see over on the S32, the South 32 part of this district. Okay, why is this important? Well, we at Barksdale have likely the porphyry driver, the mothership, we'll call it the heat engine, that produced this mineral system in this district on our property. And you have S32, which has the carbonate replacement deposits coming along, and now they've hit our property boundary. Okay, boom, there's the property boundary. We have drilled a hole just on the other side of the property that says, hey, we've got the same style of mineralization here. In other words, we found the rest of the ore body, or rest of the deposit. Can't say it's an ore body yet. We don't know, but we're hopeful, and we hope that that will continue all the way down to that porphyry, which means we have a big area that we could conceivably have a large CRD and maybe even skarn system. Let's talk a little more about this. Go to the next slide. Okay, this is the plan map that shows our property position in blue. So the dark blue outline is Barksdale's earning property. They're earning in from Regal. And the drill hole that was completed is that red kind of squiggle you see behind the AA prime section there. So that's the drill hole that was just finished. You can see it goes down, it kind of curls. So we're looking at it in plan view. Most people don't know this, but when you drill a hole, it doesn't necessarily always just go perfectly straight into the ground. Sometimes it deflects a bit, and almost always really. And in this case, it did, but it did hit the area that you can see is just inboard from Taylor and the Peak deposit. That Peak deposit's a green one. Okay, so we are in an area where the Taylor deposit literally just crosses the property boundary, comes onto our property, and we have now, in my view, visually at least, we see confirmation that we have mineral in that area. This is very, very exciting, guys. Okay, go to the next slide. Okay, now this is a cross-sectional view. So this is a AA prime. This is looking at the earth, sliced through and looking at it from the side, and we're looking eastward. So the drill hole started up at surface there. It looks like it's a little below surface, but it's colored. There's just a bit of relief here. It's colored at surface. Goes down, 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 goes through a bunch of volcanic rocks, which are in green. And then it got down into the critical layers of rock in blue. And those rocks are basically carbonate rocks. They're rocks that are, constituted by carbonate minerals like calcite and dolomite and things like this. And they're very reactive with ore forming fluid. So the porphyry, which is probably just inboard, towards our eyeball, that drove the system was pushing fluids into those layered rocks. And we actually see some bedded, we'll call it stratiform sulfide mineralization. We saw some right at the contact with the volcanic rock. So there was a pretty good whack of mineralization, visible mineralization up right at that contact. And then we saw some a bit lower down too. Okay, so we saw two discrete horizons, and there was a lot of a noisy, like veinlets and whatnot, and sulfides in between as well. So really there was it was a few hundred feet, like maybe 300 feet and change of sulfides, visible sulfides with at least a couple of very pronounced areas of sulfide mineralization. So what did this sulfide look like? Let's go to the next slide. Okay, the top and the bottom photos here are both pictures of core. You can see the depths and stuff in the caption at the bottom. 42 or 44 to 22 feet, and then 44 to 49 feet. So this is deep, guys. This is over 1,300 meters in the ground. It's a deep target, but it is at the same level as the deposit that South 32 is developing. Okay, so it's not like this is extremely crazy to be drilling holes like this when there's a mine going in right next door that's going into this ore body. But what we're looking at here in both cases, okay, are sulfides, particularly of minerals that we call ore minerals. They're basically sulfide minerals. These are metals combined with sulfur that tell us there's copper. So in the case of copper, it's chalcopyrite, and lead, which is galena, in these pictures. Okay, and this is really intriguing because not only do we see the Taylor-like kind of lead, carbonate replacement style sulfides, we also see higher copper in the chalcopyrite, okay, which is really intriguing because they don't have much copper over at Taylor. Where do they have copper? Down at Peak. Okay, so we're kind of seeing a hybrid here of two, styles of mineralization, both the base metal potentially with silver, but also the copper as well. So they're kind of overprinted. So it's kind of like a hybrid of the two styles of mineralization. Don't know what the assays are yet. Okay, we got to wait for the assays. I have not seen the core up close. I've only seen the photographs like you see here, but I'm very hopeful that we're going to see some decent numbers. Don't know what to expect yet, but if we see numbers that are in line with our neighboring company, South 32, I'd say this is going to be a really, really good outcome here. I'm very hopeful, but it is, a cautionary tale. It's going to take more drilling, more work to really prove this thing up. But this tells us, yep, we've hit our target. Okay, this is encouraging. Let's go to the next slide. Okay, this is an update on Snowline. They put out news. There was 2 news releases. Sorry, this is not the drilling. This is actually about some infrastructure development in the region. And basically, what this announcement addresses is that Fireweed Metals, which is the neighboring company to Snowline in this area, has gotten a grant secured of $35.4 million funding from the government of Canada and the United States Department of Defense. Wow, we're starting to see some money come out from good old US of A to develop metal industry. That's interesting because, have we seen that money deployed in the US? Yeah, there's been some, but to see it pop up in Canada straight away, that's really interesting. So, Canada can send us a Christmas card this year. All right. So look, this is encouraging because it says that basically they're going to fund infrastructure, in particular building road, and also looking at power line infrastructure into this region. So this is East Central Yukon. We're going to see a road come much closer, like a fully developed road and power line coming into this area. That's huge. Okay. And this is being funded for this fireweed project. So let's go to the next picture, which I think is a map, shows the area. Yeah, here we go. All right. So everything at Snowline is yellow. And the rogue property, which is kind of just off center there, up a little bit upper left, that is where Valley is. And Valley is the big discovery they have there, the very, very large gold discovery. Fireweed is this gray patch that you see down there, kind of bottom center. And they have a number of these intrusions, okay? And funny enough, they, like this Mac Tung deposit, which is a tungsten deposit, is actually a reduced intrusive, okay, which is interesting. Like they might even have gold potential on their property. But Fireweed has traditionally been focused on looking at this McMillan Pass deposit, which is a zinc deposit, very, very large zinc deposit. There's a number of large zinc deposits in this region that, quite frankly, are some of the biggest in the world. Some of the biggest undeveloped zinc, lead, silver deposits on Earth. And I think that this whole push to build this road, like improve and build the road and get the power in here, is all around the tungsten and base metals. But it does benefit Snowline because now there's basically a road very nearby. In other words, you can start to tap in and connect Valley to the rest of this infrastructure. There is a winter trail already, Platter Winter Trail, but it would be very easy to basically, improve that into a permanent road and then take it all the way into Valley. And I can remember flying, I was there last year and flying through and, we flew down a path that was clearly accessible, like pretty easy to get to build if a road needed to be built to Valley. So anyway, seeing improvements like this, a very good step. I think it also means that Yukon is telling the world they're open for business. All right, let's go to the next slide. And then they had a news release updating on drill results. They have a lot of drill holes still out, but this gives us an update on a few critical drill holes inside the Valley target. I think these numbers are great. The top one's over a 400 gram meter bottom one is there's another hole at 1.05 gram over 356 meters, just under 400 gram meter. And if you look at all of the holes that they've drilled to date in Valley, I think something like 80% of them are over 100 gram meter, which is just extraordinary. I mean, I can't think of too many deposits like that on Earth. The consistency of this mineralization is off the chart. This is one of the, I've said it many times, this is one of the best deposits I know of in the gold space. Okay, now they have a lot of assays coming back. I'll just note that before I move on to the next slide. But let's go to the next image, see what this drill data tells us. All right, so this image shows you the holes in this news release in somewhat darker color than the previously announced drill holes. And you can see virtually everything here is an infill hole of some sort. Why are these important? Well, the more they infill, the higher the confidence they can get, the better outcome, because the computer can kind of infill that grade, make sure that it's confident with the grade between widely spaced holes. Now you got holes in between holes, and that allows the computer to better define and model the resource here. Now, it also means, in my view, that there's a bit of incremental growth in this news release too. Where is it? Let's go to the next slide. We're going to look at a cross section. There we go. Okay, you can see, firstly, that the two holes here, 99 and 98, both have some mineralization that extends outside of the current conceptual pit boundary. Okay, so over there in 99 towards the bottom, there's quite a bit of yellow and even a little bit of red and orange that can be extended out in that area. But notice that hole 98 is basically snuggled up right against the wall of the pit there. Do you think the ore body is going to die away, in a few feet? No, before it hits out. No. That tells us that there's probably some runway down dip from that. And they're probably going to have, I think they have a hole off section there. I can't read the number, but whatever it is, that shows there's some mineralization, either just inboard or outboard from that area. I think you're going to see some growth, in other words, into the wall of the pit, okay, or outside of the wall of the pit. So this is a good outcome. There's a lot of numbers coming back. Notice the hole in the middle there, 111. That had visible gold in many, many locations all the way down the hole. So I think we have a lot more news to come back. Also notice the hole going the other way, 114. It's got gold clear down to the point where it leaves the image over there in the far right. So let's see where this lands. I think we're starting to see a bigger gold footprint here, certainly on the east side. And I've talked about that before. I think there's an area off on that northeast side of the pit, which will be on the right-hand side in this image, where there is good potential to add some blocks. All right, let's go to the next slide. This image shows some of the gold in the veins out of the drilling that was announced in this drill hole. So you got the hole numbers, and then the images show you the scale of gold particles and the other minerals. Again, I can't emphasize enough, the metallurgy of this deposit should be fantastic. When you see basically free gold grains like this that aren't just totally locked up in other sulfides and stuff, that's going to be a good outcome. I think metallurgically, what I get from this information is when they grind this stuff up, a lot of the gold should come out and be recoverable in gravity. And irregardless, it should be accessible to cyanidation as well, like solutions. Okay, so I think you're going to see really good recovery. They note that down towards the bottom of the caption. You can see 94% average bottle roll cyanidation to 96 in carbon in leach. Excellent deposit, excellent metallurgy. I can't say enough good things about it. Go to the next slide. Okay, Goliath has finally gotten some of their assays back, and as I understand it, they have had a hang-up with the lab. I was not aware of the hang-up, and it's a bit annoying that the lab has taken as long as they have, but they're finally starting to get their samples through. Okay, and we got a first taste late last week, I think it was, when they came out with an assay from this hole. What was the number of this hole? It was 249, which is down into the into this bonanza lode, which is kind of a flat lode that's deeper than the Sherbet lode. Look at the numbers they hit here: 226 gram per ton gold equivalent over 1 meter within 45.6 gram, which is an ounce and a half, really, over nearly 6 meters in the bonanza zone. And, I've talked about this before. It's like baklava, right? And if you hit the right layers in this, you get some very high grades. And they found very high grades in this bonanza zone. This bonanza zone, if anything, looks like it is the most robust lode or, vein system in the entire deposit so far, because the numbers that have come out of this are consistently very high. Notice they've highlighted down there in that little table in the lower right that even with that 6 meters of an ounce and a half is within nearly 9 meters of about an ounce per ton, so 30.55 gram. That's beautiful. I mean, imagine 9 meters. That's like your average living room ceiling is about 3 meters off the floor. So you're basically talking about a 3-story house, thick of mineralization. That's awesome. That's awesome. That's what we want. Let's go to the next slide. Okay, this is a plan view showing kind of the quadrangle that they've defined of this bonanza ledge so far. This is a little complicated because think of it like the baklava. We're looking at the baklava from the top, and you got a number of lodes, okay, that are shown in purple, and they're kind of defined in purple, and they're different shapes and different forms. But then this bonanza ledge, which is kind of turning out to be the highlight of this vein system, is so far defined by this yellow panel here, okay? And the apex of each corner here is defined by a drill hole, all right? And in fact, 249 is the green one over on the right-hand side there. That's where these results came from. But you can see that there's other drill holes that have been announced already within this thing that have yielded very strong numbers. So if you look at the table on the right-hand side, really good assays and nice thicknesses for a number of holes. There's a lot of holes to come, okay, a lot of assays pending. I think we're going to see this thing really emerge, hopefully as a fairly broad, high-grade vein or lode. It's fairly flat lying, okay, but it's looking like it holds together quite well. Much of the VG that they announced seeing in drill holes those intercepts came from this particular area. Now they also had something else, and it's a little bit confusing here, but you're looking at a different style of mineralization also present in this. So we have the bonanza ledge, which is the yellow sheet, okay, and we're looking down on the sheet. But then see these, there's 3 drill holes, 180, 237. Those are in what they call the intrusive dike. There's actually intrusive, they found, that's cross-cutting. It's coming up at us. It's in dikes. And they also had intercepts that went through those intrusive dikes. And lo and behold, they're finding mineralization in that as well. So we're going to talk about both styles of mineralization. Go to the next slide. We're going to look at hole 272. So one of the holes yet to come back is 272, and it is a big step out. In the previous image, it was the northern apex of that yellow polygon. Okay, so basically the company is saying, hold tight. We have some assays coming from this area that could be quite exciting. Anxious to see what they hit. But this is core from that hole, and it shows you it's a long way out. So if we start to see mineralization clear out there, hey, man, this could be a big happy days. Right, but much more to come. So there's more of our bonanza lode, but let's talk about the next thing. Go to the next slide. Now, this image is basically the same image, the same area that we saw in the bonanza lode footprint. But what we're looking at now is a view of the geology of this surebet target area, okay? And the purple lines that you see going through there are intrusive dikes that come up through the ground. And what the company has found is on occasion, the drill holes go through those dikes. And when they do, they're seeing gold in the intrusion. Why is that important? Well, it could be that those little dikes are basically intrusives that are coming off of some bigger intrusion down at depth that's driving the whole gold system. Okay, that's a likely scenario. I don't know, but the key is there's gold in those intrusions, as well as the more flat lying lodes that we've seen at Sherbet and now Bonanza and such. Okay. Now, the highest grade interval out of this, I got to put my squizzers on here and read it. 7 meters of 10.41 gram gold. That's impressive. And that's an intercept that comes out of one of the dikes. So one of these drill holes went through his whole 237, went through a dike and hit nice gold. What does it look like? Let's go to the next photograph. Here you can see intrusive dike. It's a nice salt and pepper textured rock. And there's a little quartz change. What does that look like? It kind of looks like snowline. I mean, to be frank, that's probably a reduced intrusion. And we're seeing little sheeted veins, not nearly so many sheeted veins, but there are veins in here. Okay. And they appear to be little, centimeter-ish kind of size things. And they're just chock full of gold. Look at the inset photographs and stuff. There's little bits of gold in those quartz veins. I think this is really intriguing. I don't know what to make of it exactly just yet, because, you think about, well, the intrusions, if it's driving the mineralized system, how come the intrusion itself is then subsequently cut by veins that are mineralized? I don't know exactly, but I can tell you this: it's more than happenstance that you have an intrusion here, a reduced intrusion that's got gold in it, and then you also have this vein system, a la sherbet style stuff, basically sitting right on top of each other. It's just one of these unique environments where we might have the driver and the veins that form, intertwined. So I think that's really intriguing. Lots more information to come. I'm sure there's lots of assays. I think they have something like 100 drill holes to come back. Okay, so everybody's going to got to get some popcorn and sit back and wait for the next few months as assays come rolling in. Okay, go to the next slide. Okay, one of the stories I highlighted a few weeks ago, Copper Core, they announced some visuals that were really encouraging, the copper intercept, and they're drilling at this Jukes target. Okay, now this Jukes target is one of a string of targets that they have on their property. I'll show a map here in a minute. The results are, in my view, okay, I think these are actually really encouraging, because this is early stage exploration. And to see a 50-meter intercept of 0.66% copper, 0.27 gram per ton gold, that's nice stuff. Okay. It is a bit deep, but this is an IOCG system. And I know a lot of mines. In fact, I'm looking at one in great detail right now on a project I'm working on, where the average underground grade is about 0.7-ish% copper and about 0.2 or 3 gram gold. Guess what? That's what they're hitting here. And I think these are really significant intervals. If anything, this is telling us that this system is really deep rooted, and there's a lot of runway. And I'll show you a cross section in a minute that illustrates that. Now, notice within that, there were some higher grade intervals. Like they did have a 19-meter intercept within that of 0.86% copper and almost a half a gram gold. That's encouraging. Okay. I don't see this as a bust at all. I know a lot of people were probably thinking, oh, it's going to be, 10% copper or something like this. No, this is exactly what they're looking for. And actually, this is very similar to the grades that we're seeing at the Mount Lyell deposit, which is a huge deposit not far away. Let's go to the next slide, and I'll show you where this is in geography. Okay, so the map on the left-hand side shows you their property positions, a long linear project that goes north-south. It covers a series of magnetic anomalies, very well discreetly defined mag anomalies. And then that Mount Lyell copper deposit, the copper mine itself, is owned by Sibanye-Stillwater. It's in that little tiny red polygon there, kind of towards the middle. That's a big deposit. Okay, it's like 3 million tons of copper and 3 million ounces of gold in this style of mineralization. So very important to emphasize, these are the same deposit, basically. It's two ends of the same dog. Okay, so the mineralization that these guys have found at Jukes, which you can see Jukes, the label's just a wee bit below Mount Lyell there. It's like, about a third of the way down towards the bottom. That's where they hit this mineral. Okay, in an early stage to hit this kind of mineralization, that's a win. Okay, I don't care what anybody says. Short-term, investors, bye-bye. I like stories like this because this one looks like a real discovery and could unfold in a big, big way. Why do I say that? Let's dig a little bit further. Okay, oh, sorry, hold on, don't move. You can see there on the right hand side, it's an oblique image. It's kind of looking like that's south to the upper right. Okay, but you can see where Mount Lyell is. They got their tailings dam and stuff over there. But then Jukes is that star that's kind of up in the upper right quadrant there. So you can see they're relatively close. And each one of those purple blobs is basically a target that's defined as an extension of this Mount Lyell system. All right, let's go to the next slide. Now, right here at Jukes, why am I still encouraged? First of all, look at the mag anomaly. That's huge. It's way, way bigger than just this drill hole. Okay, this drill hole you can see started. It's that blue one there. Went westward as it went deeper. Okay, and that 50-meter intercept is down there towards the bottom. Now there was a higher intercept of 132 meters, basically in the near surface, 0.35% copper and 0.19 gram gold. That's actually that could be economic. That's not a bad outcome too, but that's even closer to surface. Okay, but look at the anomaly. There's a lot more to drill here. Okay, so this is just the beginning of a program. Let's go to the next slide. And I think this image really captures it. Okay, so the mag anomaly, the core of the mag anomaly, this is showing in cross section. Okay, and it's a kilometer high cross section. That mag anomaly is that blue thing. Okay, now oftentimes the copper and the gold are not inside the mag anomaly. They're on the outside, just on the edge of it. They're like a shell around it. Notice how there's copper and gold above in those drill holes. And then there's also copper, down towards the end of the drill hole that was announced as they come out of the out of the mag anomaly. Okay, so basically that's the environment you want to be in, is the shell around the mag anomaly. Notice there's a drill hole or an adit, right up there at surface. It has I think it says 50 meters, 0.74 copper and 0.39 gold. Well, there's a lot of room. There's like 400 meters between that and this intercept that they hit in this drill hole. That's a lot of room. Okay, I'm looking at a project right now in great detail that has almost identical numbers to that, and it's a fantastic mine. It's an operating mine. So, in my view, this is a success that needs to be followed up. I know the market wants instant gratification and stuff. Most people don't understand IOCGs and don't understand what this means. I think this is a great outcome, and I really hope the company has enough wherewithal and cash to keep going, because I do think they're onto something. All right, let's go to the next slide. And one last image here. This even confirms it more. Okay, this shows you the copper anomalism in soils at surface. It's huge. Like that big red blob. I mean, that's enormous. Okay, you can see where all of the drilling is to date is way down there at the south end, and it's barely just clipped, the southern end of this blob. Look at all the stuff to the, if you think that this story is over, you're crazy. I mean, we know the mag anomalies up there, but we also know there's big halo of copper extending northward. Oh man, they're onto something. If people want to sell, go for it. But if others want to hang around, I think it's worth following the story a bit longer. Okay, let's go to the next slide. Magotes. Okay, Magotes is gotten out in the field. They actually started work a few weeks ago, and the first work they're doing is actually trenching and some other work like along road cuts and stuff, pushing access into the area. They do plan to drill here shortly, but right now they're doing surface work to help refine or define their drill targets. They announced an update about 3 or 4 days ago. Go to the next slide, and in that they just simply highlight some of the work they've done to refresh everybody's memory. I'll show you the targets and the concept here. Over on the left-hand side, you can see the Filo deposit, the Aurora deposit coming down. It trends straight towards the northwest corner of Magotes ground. And funny enough, Filo announced a drill hole very recently, I think it was in the past 2 weeks, where they hit a nice interval, 610 meters of almost half gram gold, 0.15% copper, and it's just outboard from the corner of the property position for Magotes here. But notice the anomaly starts bending around and coming more eastward. I think Magotes, I think it's a very compelling case that they have the rest of the philo trend, the philo system, if you will. And the work they're doing right now, including sampling of road cuts as they push tracks in to get their drill pad or make drill pads and stuff. I think this is going to help provide some clarity on some of their targeting as well. So they're basically pushing roads in. They're also sampling as they do, because you want to gather as much data as you can out of an exercise like that. This is the Rincon area, which you can see over on the left, is kind of that bigger target. A bit more to the south, it's kind of big, long, elongate footprint. To me, that target looks a lot like Aurora. It's a big, long, linear, elongate anomaly. Hello, this is the land of giants, and these guys are tackling something that I think could be the other half of a giant up here. Okay, go to the next slide. And then they have one more image here from trenching. Yeah, they did some trenching. They do see visible copper in some of the trenching. You think that's a good sign? Yeah, I think that's a good indication there's something there. Okay, so the company's trying to get people stoked up and refocused now that they're back at work in the summertime down in the southern hemisphere. I can't wait until they start drilling some of these things. This is one of the most exciting copper exploration stories I know of out there. And again, this might be a really hot story in 2025 as they start to drill some of these targets. Company's well cashed up. They got a good team. Let's see them go. Let's go to the next slide. Brixton, they finished their drill program from this current summer and have announced results from their gold project at Thorn recently. But now they've added some drill intercepts out of their Camp Creek target. Okay, this is a copper, we'll call it copper primary target that they have. And they hit some whopping intervals here, 647 meters of about 0.5% copper equivalent. They did see some gold up high in that hole. I'll talk about that briefly too. But they did hit some really nice mineralization. Inside of that 647 meters are some higher grade intervals, and I want to highlight those here in a second. Go to the next slide. This table shows you the breakdown of metal in these drill holes. In hole 307, you can see, there's the 647 meters of 0.26% copper, 0.11 gram gold. Look at the moly. The moly's quite high, 274. That's actually over a half pound of moly per ton. That's really good for a porphyry system. And that kind of sets it apart from a lot of porphyries in the BC world. Again, I think these are different porphyries than most people are used to up in BC. These smell a bit more like things we see in Arizona, even, or something like that. They're a different genre, but set the geologic nuance aside. These are really strong results. Notice there are some sub intervals in there that are even higher, like 261 meters, 0.35% copper, 0.17 gram gold. Really strong numbers. These are good results, guys. Now look at the next slide, and we'll see where it falls in the cross section. There we go. You can see the drill hole basically bolts on to the margin of the system in the third dimension over there. You can look at the plan map to see the detail. What does this hole mean? Well, it's starting to show that there's a very discrete body of higher grade mineralization, higher grade porphyry mineralization there at depth. If you just kind of let your eye carve out the reds and oranges and stuff down there at depth, I think we are seeing something that could be a few 100 million tons of decent grades, like 0.5, 0.6% copper equivalent. That's the kind of target that they need to develop here. Okay, and that's why BHP, that's why we're here, have all invested in this. This is a very compelling copper discovery. It's going to take a little while longer to drill it out, but so far, highly successful results. So let's go to the next slide. And then they had a brief news release talking about drilling another target. This is up at the north end of the Thorn project, where they tested a few random holes into some porphyry targets, and they did hit mineralization. Go to the next slide. We'll talk about it. Not huge numbers here, but they do have long intervals of highly anomalous mineralization, a few hundred ppm copper, which is 0.0x in percent world. And then they have a couple down there where you're seeing at least 0.1% copper or better. This is early stage data, but it shows there's more porphyry potential across the property. Is it earth shattering? No, but go to the next slide. But it's a good first start. And you can see the targets here. You can see the whole drill hole locations on those targets. And for a first pass, it's not bad. Is it what they should focus on, where they should follow up? Not right yet. Okay, you can see Camp Creek or Camp down there. Camp Creek is just to the south of it. I'd focus my money there because that's a discovery. All right, let's go to the next slide. Newfound announced changes in the team at the company, and they've appointed a guy named Paul Hewitt as independent chairman. And then they've also moved some people around in the board. In particular, Melissa Render is now on the board. She's been in charge of exploration at the project for a while now. I think these are good moves. Now, a lot of people might not know who Paul Hewitt is. Paul is an incredibly successful mining, we'll say, leader. He's taken companies forward like Klondex and Karora, which used to be Beta Hunt or Beta. I think it was called Beta Hunt, and sold them for high premiums in tough market too. So you can see his resume, which is kind of highlighted by Colin's quote over there on the right hand side. He sold Karora and Klondex 1.3 billion and 700 million, and that was all say within the past. Well, I think Karora was just in the past couple of years, and Klondex was in the past 7 or 8 years. Okay, so very successful. Now, Paul is this kind of guy who, when you bring him in, he will develop a vision, very concrete vision, and then execute on that. Okay, so he is basically coming into this company. Don't forget, this is important. Don't forget that Eric Sprott was one of the biggest shareholders of Karora. Okay, and it's more than coincidence that Paul is in here because Paul came in to help Karora get its poo in a pile and sold it for $1 squillion. Okay, so that was a successful outcome. I'm just saying, there's a reason for guys like Paul to be introduced into a story here because they can put together a vision and take the project forward and basically extract value out of it, ultimately through a transaction. Is that exactly what's going to happen? Nobody can predict it, but I'm saying putting a guy like Paul in place is a really good move, and I think it will direct the company in a very straight line. I think a lot of investors, especially in Toronto and areas where you see, Paul's name is well recognized, they'll also take note, and I think you'll see that build a very strong case here. Okay, so good outcome. Let's go to the next slide. I think I have 2 or 3 more slides. Sorry, it was a big week. I told you. Line 1 announced a bunch of assays from infill drill holes. So these are holes that they have where they're drilling, grade control, I should say, grade control drill holes around the areas they're mining. And again, always impressive numbers here. I mean, just mouth-watering, jaw-dropping numbers, albeit skinny intercepts. Okay, now are these fully representative of the ore they're mining? No, these are little veins, usually little things. 0.3 meters is about yay big. Right, so these don't necessarily reflect the kind of grades you get out of a mine when you mine, a few meters wide. But they are strong numbers as always. All right, go to the next slide. You can see in this image that they have holes. These are basically drill stations that are testing. We'll call it grade control as they advance mining out into certain areas. Okay, so this is telling them where the loads are, as well as what kind of grades they should expect. Some of the holes are above, some of the holes are below the actual workings right now, but they're all good numbers that should help guide the company and focus its mining efforts there. All right, so good news overall. Go to the next slide. All right, and I think this might be towards the last. Nevada King had some news out of one of their first targets, I'll say, that's kind of out of the main body of the Atlanta deposit or Atlanta area, pit area, and it's off to the north. Okay, they have endeavored to start spreading their wings and start testing new areas, and this north extension target at Atlanta has yielded some pretty decent results. You can see over here in the table a lot of tens of meters of assays that are kind of in the gram to 2 gram range with occasional higher grade in there. All right, let's go to the next slide and just put it in context. You can see in this, which is a plan view, what they're doing here is they're presenting the drill data with 2 aspects. One is the grade thickness. Okay, so the shape of the little drill holes is like whether it's a diamond or a triangle or whatever, is when you take the grade of the intercept times the length of the intercept, you multiply those numbers together, you get what's called grade thickness. The higher the grade thickness, obviously, the more strong the intercept. Okay, so those symbols represent the grade thickness, and then the colors represent the actual grade of the intercept. Okay, so that's a bit separate, but it lets your eye actually focus on where there's higher grade and better results. It kind of is a way of pictorially representing a lot of data. Okay, and you can see that they have in this north area, the pit, by the way, the main area they've been drilling is to the south. So they're well north of it. They've got a pretty good core area starting to pop up, but now they're seeing extension, like in hole 177, that's taking them off to the northwest. And I remember standing there looking across the valley. There's a lot of runway between that and areas way off to the northwest where they're hitting gold. So I think this deposit will grow substantially. I think that might be a go to the next slide. If there's one more, I don't know. No, that's it. Okay, I'm done. I'll start blathering. Stop blathering on. Done.
Have you muted? I think you're not muted though. This is weird.
Hear me now?
More or less. Go ahead. Say it again.
Okay. How about now?
Yep.
Yeah.
So thanks everyone for tuning in today. If you're interested in learning more about our investment strategies, we encourage you to reach out to Merrick. His phone number, his email address are right here. You can go to our website. You can sign up for our research letters. Like I mentioned earlier in the presentation, if you're interested in I know some people want to see the links posted in the notes below on the YouTube. We'll see if we can get them up later. But if you're interested in getting some more of those links, we've got a research paper that we can share with you. If you are an accredited investor who might be qualified for our funds, we have a research paper that we can share with you that also has those links. But we do encourage you to reach out to Merrick. You can reach out to me as well. Send us an email at info@crescat.net, which you can do on our website too. And we're happy to discuss more about what I was talking about. One important thing to add, Scott Bessent, says, when asked about crypto, he says, well, cryptocurrency is a risk-on asset. He says gold is a risk-on and a risk-off asset. Now, I think that's I think he's getting, in the typical way that he messages the marketplace. I think he's trying to tell people, well, he's trying to tell people his view on gold. And like we showed in those earlier charts, gold does work well in some risk-off environments, and particularly risk-off environments that are combined with inflation. I think there's a little bit of messaging, to be, to get ready for perhaps a little bit more risk, while they have a plan to shore up, to shore up our fiscal imbalances and get the long-term debt and deficit problem on the right course to be dealt with, and that requires some pretty pretty firm and elaborate comprehensive measures, a grand plan which they have. That there might be some risk-off elements in the financial markets to also be getting prepared for. I think that's some of the messaging, personally. So anyway, reach out to us if you want to learn more, and we'll see if we can't get some of those links in there for you. Tavi, any final comments?
No final comments. Well, happy holidays for everybody. I don't think we're going to have a live next week. As usual, we do 2 weeks now. So Merry Christmas, everyone. And we'll be back the following week. And if you're interested in learning more, I think that research paper could be another thing you may want to request through Merrick's email address there, or you can call him as well. Could be another way to learn more about what we do too. So anyways, hope you all have great holidays with your family, and we'll be back in 2 weeks. Take care.